Ladies and gentlemen, welcome back to the channel. Today is a bad day for Tesla, currently down about 2% at the time of recording this video. There's a bunch of war headlines that are affecting markets. We have some Tesla stock specific news that may be perceived as negative. We'll talk about it here in this video, but I think one of the main stories today is again the rise in oil and the fact that 10-year treasury yields are back above 4% again. For companies and sectors that are reliant on interest rates, the recent fall in 10-year treasury yields has eased up affordability for vehicles. And in the last 2 weeks, that's all been reversed, with 10-year treasury yields hitting the highest level again since August. Now, I think it's important to understand how Tesla is operating right now. Tesla is offering low interest rates basically globally, between 0% and around 2% for most 34 to 60 month loan terms. That means, let's say if the 10-year treasury is at 4%, then Tesla is buying down 4% of the interest rate on each vehicle. If, let's say, the 10-year treasury is at 3.5%, Tesla is buying down 3.5% of the interest rate to presumably offer 0%. Now, the numbers are actually a little bit different. Maybe it's 5% on a, 4% 10-year treasury yield, or 4.5% on a, 10-year treasury yield, right? Maybe there's a percent and a half that's added on top of that. Nonetheless, the higher treasury yields go, the more rate Tesla has to buy down, aka the less profitability Tesla will have for each Tesla that they are now selling. So the correlation between treasury yields is as such. If treasury yields go higher, Tesla's buying down more interest rate, they're less profitable. If yields fall on 10-year treasuries, Tesla is buying down less interest rate and they are more profitable. 10-year treasury yields are back to about 4.03%, up almost 5 basis points today alone. You also have the VIX that is rising 9% today, now almost at 21, which is crazy that markets are near all-time highs with a VIX that is at 21. And I mean, relatively speaking, the S&P is not having that bad of a day. It's down about 1/3 of 1%, but still, again, sitting less than 1% away from all-time highs. And the VIX is at 21. I mean, that's just crazy, because that means at the same time markets are almost at all-time highs, investors are going out and they're buying puts. They're willing to pay more for puts, and they're buying more puts versus calls. This is something I have stressed here on this channel many times, and you're actually seeing it reflected in the VIX. As I've said here on the channel many times, is the upside to this market is kind of limited. I mean, on a valuation basis, we're priced for perfection. How much upside do we get? I mean, if things go perfect, you're priced for that. So things have to be better than perfect. They have to exceed all expectations. And Q3 essentially needs to be a blowout. And it doesn't look like that's very likely, judging off of some of the early reporters that we have heard so far. But the downside could be extensive, and I think that is why Wall Street right now is going out and hedging their bets and buying that downside protection. Another reason why I've kind of been skeptical of Wall Street recently. Everyone sounds super bullish, but the actual positioning right now is defensive. It's kind of bearish, and you see that now reflected in the VIX. Now, as I have explained in many videos now, I think there's a multitude of different factors that are currently at play in markets. In order of magnitude of importance, I think Q3 earnings is the most important. I think economic data is the second most important catalyst or group of catalysts for markets. Below that is geopolitical tensions, which we'll get into some of the news on that front here in just a moment. And last but not least is the election. Well, last but least, I shall say, is the election. Because, again, yes, you normally sell off before an election. But when you have so many other different, things going on that are more impactful to company earnings to valuations in markets, I don't think the election holds that much weight this time around. We kind of already know what to expect if either individual wins the White House. And it really doesn't matter who wins the White House. It really matters what the split of Congress is. If it's a sweep in either direction, that's bad. If it's split, which looks most likely, then it's the same old, same old. So I don't think you need to see an election-driven correction before the election. And I don't think you need to see an election-driven rally after the election. I think it really just depends on Q3 earnings, economic data, and the geopolitical uncertainties. Now, again, with this risk-off nature that fund managers are taking right now, forget their words. Their words are garbage. Goldman Sachs just came out today and lowered their recession odds to 15% next year. Forget those garbage words. Forget the bullish commentary. The positioning is negative. The VIX is at 21 as markets are less than 1% off of all-time highs. Again, let me reiterate what that means. That means fund managers are going out and buying puts on the S&P 500. The VIX monitors the puts to calls on the S&P, number one. It also measures the extra premium that fund managers and retail investors, really everyone, is willing to pay for those puts. So not only is there more puts being bought than calls right now, they're paying more for the puts versus the calls. Like if there's a 5% upside call on the S&P, it might be going for, let's say, $100. Those hedge funds and institutions, retail investors, they're willing to buy a 5% out the money put for $200. Let's just say that, just magical numbers here. That's not what you would expect to see when everyone sounds so bullish. And with Tesla stock being one of the most risk on or risk off trades in our markets, yeah, it's going to be affected by the negative positioning that you are seeing from Wall Street. And what I mean by that is Tesla does very well when markets go risk on. It does very poorly when markets go risk off. And again, even though you're less than 1% from all-time highs, in the last week or two, there has been this real risk off positioning in Wall Street. Again, let me say it for like the fourth time. The VIX is at 21. It's been surging. And markets have not skipped a beat. We really haven't fell all too much. In my opinion, the VIX is screaming something is about to happen. But we'll talk about that a little bit more in the next video, so stay tuned to the channel for that one. Now, some of the news that broke today that sent markets lower was this, quote, according to senior U.S. officials, the Israeli retaliatory strike against Iran for last week's ballistic missile attack is believed to be imminent. And this piece shared to us from Walter Bloomberg says Israel response against Iran will occur, quote, soon. It's also being reported that Iran has drawn up 10 different plans depending on what Israel hits and the size of the strike to then attack Israel back. So it looks like a larger conflict has, yes, already started. Now, most conflicts are really nothing burgers in the grand scope of things. The invasion of Ukraine was a bigger deal because Russia is a big producer of oil. And yes, that happened in 2022. Markets did very poorly following that. This time around, it's Israel and Iran. Iran is also a big producer of oil. And that's the real uncertainty. What is oil going to do? What is Israel going to target? Is that going to disrupt some of the oil supply? Why that's a bigger issue is because oil has a direct and profound link to economic activity. As Moody's even just said, that I believe I shared that with you yesterday or the day before, maybe it was Saturday. If oil were to spike to $80, $85 a barrel, that could start to have a real negative impact on economic activity, let alone $95, $100 a barrel. That would be a big problem. Now, just for a little bit of context, back in 2022, oil hit a high of $120 a barrel. There's some experts that believe if Iran's oil capacity was wiped out or a large chunk of it was wiped out, then you could see oil over $200 a barrel. That would push us into a recession. So good economic data, bad economic data, good earnings, bad earnings. What does it really matter if oil's seen a spike like that and we go into a recession anyways? That's the real concern. That's the problem with the Middle East right now. Trust me, you could have a major conflict going on anywhere else, and if it had nothing to do with oil or did not affect us economically, the markets wouldn't care about it. They might care about it for like 2 hours, but we would get over it. This conflict can have a direct impact to U.S. economic activity via oil, and that's a big concern. Hence why oil is up 3.5% today, up to almost $77 a barrel. Now let's get into some Tesla stock news. According to JP Morgan's Large Cap Growth Fund Class 1, they just reported an 84.05% increase in their ownership of Tesla. Some people are speculating that the robotaxi plans were leaked to JP Morgan, and honestly, I wouldn't be surprised. Hong Kong reported 687 Tesla sales and 28.3% market share in September, with BEV penetration at 74.8%, and Tesla has 37.9% of this segment. Belgium reported 2013 Tesla sales and 6.4% market share in September. Speaking of Israel, Israel reported 699 Tesla sales and 3.1% market share in September, with BEV penetration at 27.1%, and Tesla has 11.5% of this segment. Some other exciting news: Tesla now shares that there is over 75,000 Teslas on the road in Denmark. Tesla also announced they delivered 3,400 of these vehicles in Q3 alone. Tesla is revealed as the only AAA rated supplier in new battery storage tech bankability report. Quote, Tesla's quarterly deployment levels of ESS solutions are currently trending at record highs. Furthermore, Tesla's financial scores are at the upper end of all the companies analyzed in the first report. And here we have a GIF of what the summoning of a Tesla robotaxi may look like, and we are expecting some kind of demo like this to actually see the app potentially in use, to actually summon a vehicle in the Warner Bros. Parking lot where they are doing this robotaxi event. That would be something special. Since Tesla's new Actually Smart Summon feature launched 1 month ago, videos of people using it have collectively gotten nearly 1 billion views across all social media platforms. Also in the news today, Tesla's stock rating is being reaffirmed by Cantor Fitzgerald. They currently have a $245 price target on Tesla stock. The price objective would suggest a potential upside of 0.2% from the company's previous close. Mobileye stock is also dropping today after a downgrade from JP Morgan. The analyst lowered their rating to underweight and reduced the price target by $6 from $10 to $6. And unfortunately, anything in the autonomous vehicle sector that's bad is also going to affect Tesla negatively. It's kind of like if Nvidia or AMD were to lower guidance or something, it's going to hit Intel, it's going to hit all of your AI adjacent companies also. Same is true with regards to the robotaxi network or LiDAR companies. They're all going to be affected in a sympathy-like move. And I would imagine that's also weighing on Tesla stock today. Option activity here today, for the first time in a long time, is actually pretty negative. You have 50 different trades totaling $28.43 million with a positive order value of 49%. On the call side for this Friday, you have volume of 62% calls and volume today on the put side of about 38% put. So even though you're seeing this negative positioning around Tesla today from the interesting flow sentiment, well, it's really neutral. 49% is not like super negative. It's basically neutral. You do have the overall volume still about 2-to-1 in favor of calls versus puts. Tesla's short interest of free flow is popping up a bit here from 2.7 3.76% yesterday to 3.07% today. The dollar amount sold short in Tesla is also rising from 18.5 billion to 21.35 billion, and you currently have about 85.36 million shares sold short. That is up about 9 million from yesterday's reading of 76.68 million. So it does appear as if the last couple of days you've seen quite a bit of shorting activity in Tesla stock. But here today, you do have shorts covering about 1.11 million shares. The percent of stocks currently trading above their 50-day moving average is up to 55.7%. You actually have about 4% of all stocks today breaking below their 50-day moving average. On the CNN Fear and Greed Index, you are sitting at 74 still, which is in the higher end range of greed, almost an extreme greed. Again, with the VIX at 21 is crazy. Oh shoot, it just fell 1 point down to 73. But still, almost an extreme greed with the VIX at 21 is telling you something. For on StockTwits, sentiment for the SPY is bullish today at 57. Message volume is 44. Sentiment for Tesla is bearish at 39. 1 day ago, it was neutral at 50, so definitely a little bit more bearish today than yesterday. Message volume today is normal at 50. Yesterday, it was low at 39, and the participation ratio is high at 56. If we take a look at Google Trends data, you can continue to see a slight upwards trajectory in Model Y and Model 3 search trend, interest on Google. You can see the Cybertruck is going from 42 up to 50, so definitely seeing more interest in the Cybertruck in recent days. With that said, the most important technical level for Tesla is $246 per share. We are currently at about $245 per share. If we get above $246 by the end of the trading day today, that's going to be a lot more encouraging. Now, if we fall even further from here, that's not good. Why the 246 level is important is because that was the gap that we had on July 23rd. Okay, so really that signifies an important level. Let's hope, but I think the more Tesla sells off heading into October 10th, the larger the rally could possibly be after that event. And I do think if you've been bullish on Tesla anytime in the last couple of months and you wanted an upside, trade for the Robotaxi event, now is probably not a bad time to get yourself one. It's not financial advice. It's not a recommendation. If you guys want to see the trades that I am making when I make them, check out that link down below in the description of this video. It's also a way of supporting the channel, and also thank you guys for about the 25 of you that are now members here on the channel. $5 a month helps make all of this possible, and it's pretty cool. You can chat with a badge, and the messages do stick out. So I respond to all of them. I try to respond to as many messages as possible, but really the members, thank you guys for supporting when I've never asked, and some of you guys just take that initiative on yourself, so I do appreciate it. Hopefully you learned something here in this video. Hopefully you're more educated now than you were when you started the video. You guys have a great rest of your day, and join me for that video coming out at 8 p.m. tonight. You do not want to miss it. Nonetheless, stay safe out there, and I will see you in the next one.